All right. Good afternoon, people. It's 4:03 p.m. Market's just closed. Let's get right to it. We had losses on the market today. Dow down 1.57, S&P down 1.3, Nasdaq down 0.9%. Although there are some stocks that do put on gains in this environment. If you follow Gregory Mannarino's newsletter, you'll see that PayPal was one of the recent ones he put out, and that one's been performing very, very well. I don't actually know how it ended the day. Yeah, up 2%. It was up yesterday substantially again, so that's beautiful. But a risk-off day in the market by almost every accord except crude oil, which also put on a gain. So some nice things happening. Crude oil going much higher, and it was negative earlier. If you bought that dip, you're sitting very pretty. Gold and silver just about flat. Gold put on a slight loss, silver slight gain. Nothing much happening there. But let's talk about this market, and what I really want to get to is the yield curve. I saw something interesting today that I thought could kind of clue you in on how controlled and managed this market is, and kind of how to interpret the situation that we're in. But anyways, yeah, Dow loser on the day, Nasdaq 1%. I mean, first of all, this is nothing. I mean, it would be great to see the market fall further. Will it? I mean, I wouldn't bet my money on it, right? I'm a bull, I'm not gonna bet against this market. I bought J.P. Morgan today, and so that's all well and good. Cryptos put on substantial losses today, but again, we're still at 35,000 on Bitcoin. I don't see anything happening here, nothing substantial. I continue to hold my crypto positions. Nothing is going to change that right now. But yeah, definitely some fear being injected into the market. And I think it was definitely partially due to Bullard coming out earlier and signaling even earlier rate hikes. And this is their plan. They know exactly what effect their words are going to have on the market, and they plan this out all in advance. So it's not like Bullard came out and he's like saying this stuff and he's like, oh no, I hurt the market. What's happening? No, he knew he was going to hit the market, and that's that. But he did signal, like I said earlier, it's going to be dependent upon economic forces. So the Fed has no intentions of stopping. There's no reason for them to stop because they gain more power if they inflate more, and pretty much everybody wants them to inflate more. We see big packages being pushed in Congress. We see people advocating for certain policies and programs. What are these programs going to be funded by? Do we have the cash? No. Sure, we could try to tax it, but that would just kill the economy even more. And of course, everything the Fed is doing is absolutely terrible for the economy as well. Quantitative easing and all that stuff. It only stimulates demand. It can't actually correct the negative forces in the economy. It can't, for example, it stimulates zombie businesses. It doesn't allow the natural restructuring, because the natural restructuring of an economy, it always is more painful in the short term, but it works out better in the long run. That's why you have quick, sharp recessions rather than these drawn-out depressions. The Great Depression was caused by the Federal Reserve, in large part due to their interest rate policy in the 1920s and 1930s. And so was the 2008 crisis due to the low interest rates, which stimulated the housing bubble. Along with other things. I'm not saying that, for example, the rise of technology and mechanized trading and complex derivatives didn't add on to this, but the root cause of all of it was the interest rate environment and the imbalances that got created. You see, naturally, imbalances are always going to exist. Bubbles are always going to exist in smaller quantities. What the Fed does is inflate them more and create bigger crises so that then they can reinflate and gain more power. Again, if you look at the Fed balance sheet, it only goes up. It only goes up. And they only get more powerful. This is not by accident. Okay, so we did have Fed Kashkari, though, coming out saying he doesn't want any rate hikes through 2023. And so that's a somewhat good sign for the market. But that was at 3:44 that article was published. And it didn't seem to help the market really much. We ended pretty much on the lows of the day. But the 10-year yield, again, this fear reaction, it dropped 7 basis points. So what's going on here? If we're talking about interest rate hikes, but interest rates are falling, does something not add up to you? It doesn't really add up for me. And when I saw this 10-year note, I looked at the yield curve, and then I really started thinking, because the yield on short-term treasuries right now are lower than they were a year ago. 1 month, 3 months, 6 month, 1 year, and the 2 year is just about even. After 2 years, the rates go up versus a year ago. But how does this make any sense? Because the inflation narrative has just really been flooding the airwaves. We've just now been hearing about this inflation. And so you would think that maybe a 1 month treasury would have a pretty high interest rate, and then the Fed is coming out and everybody on the mainstream is saying, oh, the inflation is transitory, so it's going to go away after a period of time. So therefore you might expect that longer yield treasuries would have a lower interest rate. But why doesn't that happen? Because the Fed is doing yield curve control. This is something that it's kind of been reported on, but nobody really wants to talk about it because they understand how negative it is for the market if people were allowed to know this reality, because retail investors would, or regular people would start kind of thinking about this stuff. But the inverted yield curve, which I'm not saying we should have one because I don't think inflation is transitory, but if they're saying inflation is transitory, why do we have short-term yields lower than they were a year ago? And why do we have the longer-term yields higher than the shorter-term yields? It is backwards according to what they're telling us. But of course, like I was saying the other day, I think the Fed is the one coming in and buying the 10-year yield, buying bonds, and then funneling the cash that they purchase it with to whoever owned them. And those people who own it are putting those into other assets. But look at this dynamic and try to explain to me how the market isn't rigged. Explain to me how everything isn't controlled by the Fed, because I don't see how it's possible. I mean, it's not in my view, but if you have some information regarding that, I'd like to hear about it because I think it's interesting. And so, just to, I guess, wrap this up, not a whole crazy amount. I mean, so for the week, the Dow was down 3.5%, NASDAQ not as much, but the dollar index, it stayed high, a little off of its high. It was at 92.4, ended at 92.26. And look, the dollar, it was trying to break below 90. It didn't happen, and so we get a bump above here. I'm not concerned about it. I think the dollar is going a lot lower in this environment, and the Fed will increase its asset purchases at some point in the future, and it definitely won't be tapering. And so it's business as usual. Right now, a fear reaction is trying to be created to push people in the wrong direction rather than having them have the confidence to stick to their guns like I am and let this all play out. That's really that. And gold's at 1764. I don't care. It's going way higher. You can short gold if you want to. I don't short gold. I'm not. I'm heavily invested into gold stocks and everything, but I trade the options, but I also hold the core stocks. So that's just a buy and hold. You don't need to. This is really the thing with gold and silver. If you know they're rigged, just don't buy short-term shit. It will correct back up at some point. I see the downside risk at about 1720 right now. So maybe another 2% drop is possible here, but I see across the board, stocks, gold, silver, crypto, I see massive opportunity right here, right now. I just think that the market has really overreacted to what happened on Wednesday with the Federal Reserve, and it presents opportunity. I will not be changing my opinion on that. I don't care what they do to it. I don't care how much the market falls. I want the market to fall more because that would present a bigger opportunity for us. All right. It's Friday. Thank God it's Friday. Have a great weekend. And I will see you. Maybe I'll do something special on Sunday. We'll see. I got a big weekend planned for myself, so have yourself a good weekend. I'll see you on Monday, and that's really that. Hit the like button, hit the subscribe button if you like anything of what I'm putting out. I know that if you follow my advice this week, you definitely didn't make money in the market. I mean, of course, I've been saying oil's going up, so oil's been good, but the financials have been underperforming. I can't lie about that. Gold and silver got fucking hit by a rocket, or something, some nuclear bomb of rigging this week, and that's fine. What do you want me to say? I am telling you what I'm going to be doing with my money, and that's that. All right. Love you lots. See you later.